Hi guys, welcome back to my diary. And if you're new here, in this space, I talk about forex related stuff, the mistake I've made and I keep making, and most important, the lesson that I keep learning because at the end of the day, we are all market students and we are open to any mistake that we make. We are ready to be accounted for. So, if you find this video very interesting, kindly hit the subscribe button, comment, share, and tell me what you think. And in today's video, I want us to analyze GBPUSD. I know it is not that too late. We can still analyze GBPUSD from monthly, weekly, daily, and see what is happening. And again, I'm analyzing GBPUSD in 3 steps, the way I'm viewing GBPUSD. But for now, let's start with monthly, weekly, daily, and see what has been happening. Now, from the monthly time frame, this is what I'm seeing on GBPUSD. Again, I did a video on how to analyze from monthly, weekly, daily, and 4 hours, sorry, so that you can find an entry. So I'm just going roughly to see what is happening. From monthly, we can see this market. Of course, it is a downtrend. It has been trending downtrend, but for a long period of time, it has been consolidating. We start from there. The market has been consolidating for quite a period of time. At least we have an understanding that as much as we want to trade this market, it has been consolidating. This is from the monthly perspective. And we go to the price action of the previous candle, we can see that the candle that was printed last month, March, it is more of a gravestone doji. It suggests that the sellers are in control, but that is not all. You still have to have other confluence for you to enter the market. Like just have like more than three. I always like saying have more than three so that you have a valid reason on why you are entering that market. And again, for the forex pattern, there is nothing much because the market has been consolidating. I told you, in case you see a market that is consolidating, just stay away from that market. But you see, this is monthly, so you cannot stay a whole month, because if you say I'll not trade the whole month, then you see then maybe the last thing you could have traded was from 2022 December, and from there you see the market has been consolidating. But that is what I can see on monthly. Now when we go to weekly, because we have to narrow down until we get an entry, the same thing has been happening on weekly. There is still nothing much. On weekly, again, the market has been consolidating. You see, this market is consolidating. And one thing I've come to realize about the GPP or the pound pairs, especially the GBP USD, it consolidates a lot. But when it starts to move, this market can move. Like, do you know this market can move like more than, I don't know, more than 100 or even 200 pips when there's news? Like, it can move, but it loves consolidating a lot. So when you least expect, this market will move. But again, let's try and understand what is happening on weekly. There is nothing much. You see the same consolidation is on weekly, and the previous candle, this is the previous candle of the weekly, is more of a spinning top. So it shows rejection in the market. Yes, the buyers are there, but again, it shows rejection. So there's still nothing much. And and again, you can see here we still have a small consolidation. So this market loves consolidating a lot. For those who have been trading GBP USD, I know you understand. It loves consolidating. It can consolidate until you get bored, but when it starts to move, it moves, and it doesn't obey structure that much. When it breaks a zone, it just goes. That is the best thing about GBP USD. So you can see there's still another consolidation for weeks. It has been again consolidating. Now when we go to daily, this is what I'm seeing on daily. On daily, the same thing is happening. There's nothing much in GBP USD, but still we have to get an entry, because the moment you understand where the pound is heading to, you'll understand where all the other pound pairs they are heading to, because GBP USD is the king. For me, it's the king because I'm a girl, so it is the king. And whenever you understand where the king is heading, then you know how to trade all the other pound pairs. Especially for us who live in Kenya, we love, I myself, I love GBP USD because it favors me during the London session, because during the London session it is daytime for me, so I can easily analyze the chart and see what is happening. So you see, the market has been consolidating again on daily. But now, how do I view the chart in 3 steps? Because at the end of the day, we have to know how to view this chart. So this is where my analysis comes in. And the first one, let me write for you here. I will use daily double double daily double bottom. In this channel, I said I want to focus on two patterns, but with time, I'll get to introduce to you the other patterns I know, but let me just stick to two patterns so that people can understand. And the first one, I will use daily double bottom. This is what I'm seeing. And again, when you're trading GBP from the monthly, you see the market has been consolidating. So this is not the kind of a market that you enter and you swing trade for a whole week. No, be careful. Be careful, because anytime the market can be against you. So this is how I'm viewing GBP. I'll try to use this double bottom to work in my favor. See, this is the double bottom that I'm seeing on daily. And as always, you have to mark our zones. This is our neckline. This is the neckline. And our half, we also have to measure our half, but in half, it is not necessarily where the market will go. It just shows us like this is where the market will go, but it is not a must for that market to reach there. They are just drawing that help you to understand where the market is most likely to go to. Okay? So don't be so much excited like it must go to the half. No, they are just drawing to tell you where the market will go to, and you also have to use other confluence to help you figure out where the market is heading. You don't stick to one thing. Try to use multiple, then scale them down until you come with like a single line. Like you have a whole book, summarize that book so that you have your own strategy. Okay? So this is what I'm seeing. This is our first leg, and this is our second leg. This is our half, and this is our neckline. I don't need to write. And I know you understand what I'm saying. And if I'm to enter this market, you are supposed to enter this market around this area, because you already have you have to go to lower time frame and see what is happening so that you could have entered the market. And this is where the market is most likely to go to, or it can even come to this zone. Again, I did a video on Euro USD because they move the same. The market can come to this zone, then it create a pattern and continue going down or up. But at least for now, we are waiting for this market to come to this zone, because you cannot enter this market here. You cannot enter this market here because there is a small zone here. I don't know if you can see. There is a small zone, but in 4 hours, that zone is seen clearly. So you cannot buy this market here unless you wait for this market to break that zone and continue heading to where it is going. You see, you have to wait for that market to break that zone, then you can continue buying to maybe this zone. Okay? If not, again, you have to wait for that market. If it does not break this zone, then you have to wait for retest, and you'll use that retest to sell this market. So that is the first thing I'll use to enter the market. That is how I will analyze the market in the first place. The second one, if I'm to analyze the market, I will use the simple one, the box. I know I've not taught you about the box, but the box, this is where the market has been consolidating for a long period of time. You see, the market has been consolidating on daily, weekly, 4 hour, it is consolidating. And what do? You just wait for this market to break this zone and you enter the market. Again, when you go even to 4 hour, you'll see that the market is consolidating. You see, this market has been consolidating. So you'll just have to wait. Let me stick to daily. You just have to wait for the market to break that box and you enter. Nothing much. Just wait for the market to break the box and you can enter that market. And how do you, like, let me draw so that you can see how I will enter that market. My Wi-Fi is so slow to do today. What am I saying? My Wi-Fi is very slow today, so bear with me. I will wait for this market to break like this, to break here, and I will enter that market. Okay, if not like that, then I will wait for it to break on the lower side, then I will enter like that. Just wait for the market to break, then I will enter, because inside trading inside this box is a bit tricky. For especially if you are starting out, you will lose because the market can easily come here. You see the way the market is behaving. This market can come here, and you are thinking it will head here. All of a sudden, because of the zone that I've shown you on the daily, then it drops, because this market, a consolidating market, is very hard to trade. So don't be caught on the wrong side. So be careful. That is the first thing that I will. That is the second thing that I will do. I'll just wait for the box to break, then I will trade that market. Okay, now the last thing, it is a bit complicated, but again, you have to understand it, because we still have to know what is happening to the market. You better have be prepared for an opportunity, rather than when you get an opportunity and you're not prepared and you don't even know what to do. The third one, I'll go to 4 hour, and in 4 hour, I'll try to see what is happening. Again, on 4 hour, can you see there is a box? You can also use the 4 hour. You can also use this box on the 4 hour. Wait for this box to break, and it is almost breaking. The candle has not yet closed. So if you don't want to use the daily, you can use the 4 hour. You see, you can use the 4 hour. You wait for the box to break, wait for the retest, then measure the distance of this box, and trade to that zone. You just measure this box like that. If you don't want to wait for daily, use the 4 hour then. Ensure that you measure the distance of this market, of this box, where it is most likely to head to. Then you see it is exactly to where the daily is heading, because on the daily you just see this one. So it can come to this zone, but at least just wait. So on 4 hour again, this is what I will do. I'll try to look for a pattern, because I love pattern and they give me confidence. So in 4 hour, what can you spot here? In 4 hour, I can see a double top here. It is not exactly a double top. It is more of a zone, but I'll just view it as a double top so that I can understand what is happening. I'll mark my zones from here. This is my zone from there, and let me try to see if I can get an entry from there. I'll mark my neckline. This should be my neckline, and as always, I have to mark my half. This is where my half should be, because this is the area where the market went to before it dropped. Now this should be my half. My half should always be red. I always prefer this red color for my half. And so I know I've not taught you about this one. Now this is what I'll do if I'm to enter this market for a buy, especially a buy on 4 hour. And when I mean 4 hour, I'm only using 4 hour. I'm not flipping from one time frame to another. I'm just using 4 hour. You see this market, when it came here, whenever it comes to this zone, it drops. Like this, it cannot pass this zone. It always drop. Again, it tried the second time and it dropped. Okay, so we are anticipating that in case this market does not break this zone again, our market will go down. Okay, if it does not break this zone, the market will go down. What do I mean? This is what I'm trying to say. If it does not break that zone, the market will, if it breaks that zone, the market will go up. But if it breaks the zone, it goes up. But if it fails to break this zone again, we know it will go down. That's simple. Just make it that simple. You have to know the market can either go up or go down. So you don't have to stick like I have to buy, I have to buy. No, it can go in any side. You just have to be prepared. Just mark your zone, come and watch what the market is doing and leave the market. Because that is what can happen to the market. You can either be a buyer or a seller. But on this case, you are not sure. You have to wait and see what is happening, because I cannot enter a buy here. No, I have to wait for this zone to be broken, then I'll enter the buy if when it is retesting, because it can even be a false breakout. Okay, so now this is where my third pattern is coming from. You see this market, this is our half. After I've already marked my zone, this is our half, and you see what I'm trying to see here, the market can be creating something we call a cup and handle. This is where the market has gone to the half and it failed to continue finishing the whole of that pattern to the neckline. Instead, it just went to the half, and when it reached the half, it reversed and it is going upward, like it is going up. Now this is the handle. I don't know if you can understand what I'm trying to say. Let me just try and draw. Now this is the handle of the curve, and you see the market just went here. It is not necessarily a must it just go exactly to the half, but it never completed the pattern. It never went to the neckline because you wanted the market to go to the neckline, continue going down, but instead it is going up. So what I'm just trying to say, this market can be creating a curve. This is our curve and this is our handle, where we are waiting that this market, if it breaks this zone, then it will continue going up. And when it goes up, do you know what it means? It means that the distance that this market will move is the same distance that it could have moved if it created the whole, if it finished the whole pattern. I feel like I want to talk in Kiswahili because explaining is quite hard. It is quite hard, but I want you to understand what I'm saying. So this is what the market can do. If it breaks that zone, then it is most likely it will come to this zone. And you see it is aligning with the daily, because even from the box channel we said in case the market break that zone, where the market is most likely to go to is that zone. So you see, and that should be the half of that box. So those are my three analyses. In case our market break that zone, this is where we anticipate that the market will go. And if it fails to break the zone, then it will continue consolidating for the longest time, because there's nothing much we can do. We just have to anticipate what the market will do, because it is not a must. We are just analyzing the chart and we let the chart play and see what will happen, because we cannot move the market. And we always say there's another chance. So that is what I'm seeing in our chart. In case our market break this zone on the 4-hour, we'll wait for retest and the market will go to the half of the double top that was created on the 4-hour. This is only on the 4-hour, but in case if it does not break this box, then again we'll just look for an entry and see what will happen. And this is not the type of a trade that you hold for a long period of time, because you see already the market is consolidating. So you don't hold this market for a long period of time. So that is what I'm saying. This is what I'm seeing my analysis if I'm to enter Gbpusd. But again, we will see what the market will do. Try and tell me, can you see the same thing I'm seeing? I'm seeing three things in the same chart. A double bottom on daily, a cup and handle on 4-hour, and a box channel. But we use everything to favor us. Okay? Let me hope that you'll go to our direction, and in case you go, I will come back again and tell you that is what I saw. So thank you so much for watching today's video. I hope you got something. Until next time, bye bye.